Now let's look at this question. Mr. Garuba started business on 1st February 2021 with capital of 16,000 naira cash. The following transactions were carried out. You are required to prepare ledger accounts. February 1, purchase furniture by cash, 2,400 naira. February 3, purchase stationery with 200 naira cash. February 5, purchase goods by cash, 3,500 naira. February 9, purchase goods on credit from Titi, 7,000 naira. February 10, sold goods for cash, 70,000 naira. February 10, sold goods to Temi on credit for 130,000 naira. February 18, paid advertisement expenses for 30,000 naira cash. February 18, paid Titi 5,000 naira cash as part payment for goods bought on credit from her. February 25, receive 120,000 naira cash from Temi for goods sold to her on credit. Now let's look at the first analysis of how to prepare the first exercise, where Mr. Garuba started business on 1st February 2001 with capital of 16,000 naira cash. So now the two accounts involved in this transaction are cash, which will be debited, capital, which will be credited, in line with debt Clic, where we are to debit assets when they increase, and asset of the business is here. The asset of the business in terms of cash is increasing, so we are to credit capital when they increase. So the claim of Mr. Garuba to the business is increasing in this way. So posting into the ledger account, we open an account for cash and capital. So let's look at cash. Cash account will be written on top of the ledger account. So on the debit side, the left hand side is the debit side, while the right hand side is the credit side. So on the debit side of cash account, we write the date, which is the left hand side. So the date is 1st of February 2021. Then we write capital in the particulars column to show that the reason why cash account is being debited is as a result of the capital invested into the business by Mr. Garuba. Then in the amounts column, we write 16,000 naira. Now for capital, we are going to credit capital. And how do we credit capital? We go to the credit side, which is the right hand side of capital accounts, and write the date, 1st of February 2001. Then we write cash to show that the corresponding account involved in this transaction is cash. That is, the other account that is involved is cash. That is because cash increase. That's why the capital introduced is in form of cash. Then we write the amount, which is 16,000 naira. 16,000 naira. Now for the second transaction, when they purchase goods by cash, 2,400 naira. The two accounting elements involved in the transaction are assets, which are furniture, which is increasing, cash, which is reducing. According to their Clic acronym, when an asset is increasing, we debit such an asset. So furniture account will be debited. Equally, when an asset is reducing, it will be credited. So cash account will be credited. And to show that, we go to the credit side of the cash account, which is the right hand side. We write the date, 1st of February 2021. Then in the particulars column, we write furniture to indicate that the account that led to the decrease in capital was the furniture purchase. Then we write the amount, which is 2,400. Now for furniture account, we debit furniture account and by writing the date, 1st of February 2021 on the debit side of furniture account. Then we write the cash to indicate that the account that what was paid for the furniture purchase was cash and not on credit basis. Then we write the amount involved, which is 2,400 naira. Now for the next transaction, when the business purchase stationery with 200 naira cash, the two accounts involved in the transaction are stationery and cash. Stationery is an accounting element that is called expense, which are the cost of operating the business. Cash, on the other hand, is an accounting element referred to as assets. In line with Clic acronyms, expenses are debited when they increase, so stationery will be debited, while assets are credited when they reduce, so cash will be credited. In order to credit cash, we go to the right hand side, which is the credit side of cash account. We write the date, 2nd of February 2001. Then we write in the particulars column stationery to indicate that what led to decrease in cash account was the stationery that was bought. Then we write the amount that was used to buy stationery, which is 200 naira. Then for stationery account, we are going to debit stationery account by writing the date on the left hand side of the account. So we write 3rd of February 2021. Then we write cash in the particulars column and 200 naira in the amount column of the debit side of stationery account. February 5, purchase goods by cash 3,400. The two accounts involved in this transaction are purchases and cash. The stock of goods of the business increased when goods were purchased. The business cash reduced as a result of the purchase of goods. Thus, according to the Clic acronym, purchases, which is an asset when is increasing, will be debited, while cash, which is also an asset that is declining, will be credited. So in order to effect that, we go to the credit side of cash accounts, write the date, 3rd of February 2021. We write the reason why cash was what cash was paid for. It was paid for to buy stock of goods. So we write purchases in the particulars column. Then we write the amount 3,500 naira in the amount column. Now for purchases, we are going to debit purchases by writing the date on the debit side. We write cash to show that it was cash that was paid when the goods were purchased, and we write the amount 3,500 naira, all of them on the debit side of the purchases account. Now February 9, purchase goods on credit from Titi 7,000 naira. The two accounts involved in this transaction are purchases, which is stock of goods, which is an asset, Titi, and accounts payable, which is a liability by the business to Titi, which increased. According to Clic acronym, assets are debited when they increase, so purchases will be debited. Liabilities are credited when they increase, so the account of Titi will be credited. So to show that, we write the date when the transaction took place on the debit side of purchases account. Then we write the name of the person that goods were we write the name of the account payable, who is Titi. The person from whom goods were bought on credit, we write it equally on the debit side. Then we write the amount 7,000 naira in the amount column. Now to show Titi's own, we are going to credit Titi by writing the date the transaction took place on the credit side of his account. Then we write purchases to indicate that the liability to Titi increased as a result of goods bought on credit from her. Then we write the amount, which is 7,000 naira, in the amount section of Titi's account. February 10, sold goods for cash 70,000 naira. The two accounts involved in these transactions are cash, which is an asset, which is increasing, sales, which is an example of the accounting element known as income or revenue, which is also increasing. According to their Clic and Acronyms, when there is an increase in assets, we debit. On the other hand, when there is an increase in income, we credit. So cash will be debited, sales will be credited. So to effect this, we are going to write the date 10/2/2001 on the debit side of cash account. We write the corresponding account, that is what led to the increase of cash account, which is sales in the particulars column of the debit side of cash account. Then we write the amount 70,000 naira equally on the debit side. Then for sales, we are going to credit sales. We write the date on the credit side. We write the corresponding account, that is what was received when they sold goods on cash. It was when they sold goods on cash, so cash was received. So we write cash in the particulars. Then we write the amount, which is 70,000 naira on the credit side. Now for the next transaction that took place on February 15, when they sold goods to Temi on credit for 130,000 naira. The two accounts involved in these transactions are Temi, an account receivable, which is an example of accounting element, which is an asset. In this case, it increased. So sales, which is an example of income, which equally increased. So according to their Clic acronym, when there is an increase in assets, such an asset will be debited, and when there is an increase in any income, it will be credited. Thus, Temi's account will be debited and sales account will be credited. So in order to do that, we go to the credit side of sales account. We write the date that the transaction took place. We write the account receivable in the particulars column, that is the person goods were sold on credit to, who was Temi, on the particulars column of the sales account on the credit side of sales account. And we write the amount, which is 130,000 naira in the amount column of the credit side of sales account. So for Temi, we are going to debit Temi. Write the date when the transaction is on the debit side. We write the corresponding account, that is, we write sales account in the particulars column of Temi's, on the debit side of the particulars column of Temi's account, and we write 130,000 naira in the amount section. So February 18, paid advertisement expenses for 30,000 naira cash. The two accounting elements contained in this transaction are expenses in form of advertisement expense, which is increasing, and asset in form of cash, which is reducing. According to debt Clic acronyms, when there is increase in operating cost expense, we debit. Thus, advertisement expenses will be debited when there is a decline in asset, we credit, and as a result, cash account will be credited. So in order to credit cash account, we go to the credit side of cash account, which is the right hand side of cash account. We write the date the transaction took place. We write in the particulars column advertisement. We write in the particulars column of the credit side of cash account. We write advertisement to indicate that cash is reducing as a result of money paid for advertisement. And we write the amount that was paid, which is 30,000 naira, in the amount section. And for advertisement, we are going to debit advertisement by writing the date on the debit side of advertisement account. Then we write in the particulars column cash to indicate that they incurred advertisement expense they paid cash to incur advertisement expense. So cash will be written in the particulars column, and in the amount section we are going to write 30,000 naira. All of this will be written on the debit side of advertisement account. Now for February 20, when they paid Titi 5,000 naira cash as part payment for goods bought on credit from her, The two accounting elements contained in the transaction are asset and liability. TT and account payable, which is the organization's liability to TT reduced. TT is an account payable, and here the organization's liability to TT reduced. Cash, which is an asset. There is a decrease in business cash. Thus, according to their Clic acronym, cash should be credited because there was a decrease in assets. TT's account will be debited because there was a decrease in liability. So to effect that, we go to the credit side of cash account, we write the date. On the credit side, we write TT, who is the accounts payable, that is the person to whom money was paid to. The trade creditor, to whom money was paid to, the accounts payable. Then we write the amount that was paid to her, which is 5,000 naira. Then for TT, we go to the debit side of TT's account, we write the date. Then we write cash, which was paid to TT in settlement of the amount owed her. Then we write the amount that was paid to her, which is 5,000 naira on the credit side. Now for February 25, when they receive 120,000 naira cash from Temi for goods sold to her on credit, the two accounting elements contained in the transaction are that of assets and So the first asset is cash account, which is which increased asset. Then Temi, which is an account receivable, reduced because he paid back from previous amount owed to the business from credit sales. And according to their Clic acronym, when there is increase in assets, such an asset will be debited. Therefore, cash account will be debited. And when there is a decline in assets, such an account will be credited. As a result, Temi's account will be credited. So to effect that, in the cash account, we are going to write the dates, we are going to make all the entries on the debit side of cash account to indicate that there was an increase in cash balance. So to effect that, we write the date on the debit side. Then we write Temi, that is the person that paid the organization, the accounts receivable that paid the organization. Then we write the 130,000 naira that was received from Temi. Then for Temi, we are going to credit his account by writing the dates on the credit side. We write what was received from him in form of what they received cash from him. So we write it in the particulars column, and we write the amount received from him on the credit side. So now we have come to the end of the first part of this practical aspect of their Clic. So in the second part, we shall be balancing the account. Thank you.